It is Monday the 6th of February. I didn't record a video last week. I was away on a motorcycle tour in northern Thailand, which I really enjoyed. But more importantly, I couldn't possibly predict what the repercussions of the Fed interest rate hike and the monetary policy statement after would be. Same for Bank of England and the ECB. I leave that up to the economists. The non-farm payroll number on Friday was such a huge miss. The unemployment number is something like 3.4%, the lowest since 1970. I'm focusing on the dollar today. Now, we had got very oversold on the daily chart for the US dollar, as you can see from the slow stochastic at the bottom of the chart here. And we've had a very strong recovery. We had broken this trend line going back to 2021, which had really surprised me. We broke below it and we appeared to be plunging down to the low 99 area. But the numbers from last week turned the dollar around. The dollar index is what I'm looking at now. And the dollar's soared back up, beat Tuesday's high after the plunge on Wednesday. And we closed at the high of the week. And we're now, as I speak to you this morning, breaking above that trend line that I just showed you going back to 2021. So that all looks pretty positive. This really is very important. We've got a huge bullish engulfing candle on the dollar index, the significant new low, and then by Friday we'd recovered everything on that strong employment number back through the 2-week high. Now you can see I have got another trend line here. On the weekly chart we need to get through the trend line, which is around 103.30. That will be the key resistance for the dollar index this week. But when you look at the bullish engulfing candle on this chart, you've got to think there is a very strong chance of the dollar pushing through there. We've been oversold on the dollar index on the weekly chart for a significant period of time and just turning up after last week's strong recovery. I wonder if this recovery will be strong enough to turn the blue 100-day moving average, because as you can see, it's heading towards the 200-day moving average, which it would have crossed over in, a couple of weeks if the dollar had continued to decline. Now, it's not often that you see a move in the dollar index confirmed with several US dollar pairs. So I'm really, getting quite convinced that the dollar is going to resume that longer-term bull trend. Aussie versus the US dollar, very big bearish engulfing candle for the Aussie as the dollar rocketed up. New Zealand dollar also collapsed against the US dollar with a huge bearish engulfing candle there on the weekly chart, taking out 3 weeks of gains. The message is very clear that there is a huge bull trap in these currencies. Anyone buying into the New Zealand dollar over the last 3 weeks and not taking a profit on that long position now underwater in a huge bull trap as the slow stochastic on the weekly chart turns negative. I could almost argue that this is a double top for the New Zealand dollar. Dollar yen, not quite a bullish engulfing candle, but certainly we've turned around from a very strong support level. You'll remember that I had down there around 127.50, 127.00. That really has worked very well, and we do seem to be now pushing ahead. Nice breakout of the trend line going back to mid-November for the dollar yen as well. US dollar pushing up significantly higher against the yen. We've even got a breakaway gap this morning as the pair open above Friday's high, all looking really good. Euro versus the US dollar reversed at the trend line going back to September, just below the 500-day moving average. So looking quite negative. We do indeed have a bearish engulfing candle coupled with a shooting star with this Euro versus the US dollar chart taking out the previous week's candle on the weekly chart, almost taking out the week before as well, but that most certainly is a very negative candle, rejecting the 100-week moving average as well. Slow stochastic starting to turn negative for the euro versus the US dollar. I've got a feeling there's a lot of speculative longs in the euro versus the US dollar, which are going to get crushed by the looks of things. Cable, not quite a bearish engulfing candle, but still a very big red can, quite a bull trap there, and we've broken below a trend line which goes back to October. We've also broken the short-term 23.6% fib, the 50-day moving average. Looks like we're going to be testing the 200-day moving average at around 119.5 fairly quickly. That'll be another 100 pip drop from where we are right now. Canadian dollar chart is a mess. Really don't understand what's going on with the pattern, but clearly we have had a very strong recovery, so we've got a bullish engulfing candle there as well for the US dollar versus the Canadian dollar. You really don't see this often, where the charts of all the major pairs are lining up with the dollar index, all indicating that the dollar is about to strengthen significantly. Going back to that dollar index chart, we have been in a bull trend, well, certainly since 2021. This was just a 50% correction that we've seen so far over the last few months. But when I really do scrunch this chart up, you can see that we have been in a dollar bull trend since 2011. We've had a very serious correction, but it does look like the dollar bull trend has resumed. You have to wonder if the Fed's behind the curve again now with strong employment numbers. It does look like the US is not heading for a recession. And although energy prices have been weak lately, it wouldn't take much for them to turn around and reignite inflation. If that does happen, then obviously we're going to be talking about much higher interest rates in the US, and that is certainly going to give the dollar a big push. We'll find out sooner rather than later, I'm sure. Okay, that's it.